So one of the biggest things we come up against is obviously the barrier to entry into the market being saving a deposit. So one of my tips would be to understand the guarantor loan options. If it's suitable for you, obviously a broker would be able to talk through in more extent as to the suitability and options with that. But a lot of people, I'm often baffled by how many people don't understand a guarantor loan and how it actually can be beneficial to fast tracking their property journey. So if you're thinking the clock's ticking in 2022 to get into the market, I would strongly encourage you to educate yourself and understand what a guarantor loan can assist you with.
Yeah, sure. I think Chris, being a mortgage broker, might be able to lend a bit of advice here or a bit of wisdom. So Chris, what is it?
Yeah, thanks. That's actually I should put those as one of my tips, actually. I'd say it's guarantor loan and lender's mortgage insurance. I'd say they're both tools that you should consider if you're a first home buyer. Sometimes people think I've got to have a 20% deposit and they don't understand how LMI works and how it gets more expensive as a percentage, what you borrow and what it even is. Some people think it's a flat fee or an annual fee, etc. So get understanding of LMI, how it works. To give you a little quick tip, probably around an 88% loan or a 90% loan is what you should really aim for as a minimum. So a 10 or a 12% deposit. But if you're talking Melbourne or Sydney or Brisbane, even after the last 12 months, you're talking a lot of deposit when you add also stamp duty on top. So you could be talking 15 or 17% times the purchase price. A lot of money, right? 150, 200 grand sort of thing. So Emily's absolutely right. I mean, not everyone has got the benefit of having usually parents that are in a financial position to give you a guarantor. You know, they may not own a property, or maybe they've got a house and it's got a lot of debt on it, or, you know, maybe they've got a home. They're not looking to sell or downsize. You haven't got a family of 10 kids. You've only got one brother or sister, and that can be an issue when multiple kids want to use it at the same time, and, you know, family Christmas party antics. So there's things that we can really understand guarantors. If your parents are in the position to do it, and it's not going to affect them, and your brothers and sisters are okay with it, then it can be a huge benefit for you, because basically you don't need a deposit. You'd still want to use your money in offset accounts and things like that, but you don't need to find this deposit. You don't need to pay a big lender's mortgage insurance, and it doesn't really cost your parents anything ongoing. You pay all the mortgage. And you can the biggest thing, a mistake people make with a guarantor though, is they buy a poor quality asset. So they go to mum and dad, I'm going to use your equity in your place to protect myself, and so I don't need to pay lender's mortgage insurance. And then they go and buy an off the plan apartment, or they go and buy an investment property in a regional town and just hope for the best. So you've got to buy a quality asset. And you've got to think through how to best protect your family. Big caveat, though, I don't want to go on about this forever, but big caveat with guarantor loans is you've got to take a personal responsibility that your parents are doing you a favor, and you've got to try to get rid of it. And so I would say, you know, within 3 to 5 years, you've got to come to them with a plan prior to asking, like, this is how it works. This is the type of quality property I'm going to get, and this is how I'm going to get rid of it. Do that research first before you have a conversation with your parents about it, because that's what they really care about is you taking action once they help you.
Chris, does it have to be your parents, or can Owen guarantee my home loan?
Absolutely. If you've got an older brother or sister or family or friends or could do it, I would say that 99% of the time it's the parents, because a lot of the brothers and sisters either want to use that equity for themselves because they want to upgrade or have investments, etc. So parents are usually the ones who do it.
Yeah. And I think that's a really good point you make there about making sure you go to your parents, assuming it's your parents, prepared, because they want to know that you have the confidence that you know what it is, you know how it's going to work and how they're going to get off it, because they might, you know, typically parents might want to retire in 5 years and they might want to liquidate their home or downsize, and they've secured against their property too. So